Good morning. Good morning, Asphalt Life community. It's Tiara, content and digital marketing manager here at Atlas, and I'm really psyched. It is February and another webinar we have here today. I'm joined with Jenny DuPont from Contractor Coach Pro. Good morning, Jenny.
Good morning.
How are you?
I am doing well. A little chilly up here in the tundra of Minnesota.
Yeah, it's rainy here. I'm in my office and in Atlanta. It's rainy here, but it's definitely not as cold as it is there. So yeah, we will count our blessings, I guess we
Yeah.
should say, as a Southerner.
Mhm.
Well, glad you guys are on. I see a lot of people in the queue trying to get in. It looks like a lot of you are dialing in and getting on and getting your sound set up. You should be able to hear me loud and clear. But if you can not hear me, then you may want to dial in on the phone. Um, if you can hear me, great. Glad that you're on for today's webinar. We're going to be talking about some really important topics, specifically around cash and cash management. How do you get ahead of your cash? And this is a really big pain point. I've talked to a lot of our contractors out there in the marketplace, and a lot of you guys have come back and said, listen, we need a webinar on money management, right? How to scale appropriately, because you started off doing 2 or 3 jobs a month. Now you're doing 10 jobs. Now you're doing 10 jobs a week. And the dynamics are very different depending on where you are in your business. And so super excited, Jenny, to have you on to talk about how to tackle the dollars, the coins, how to manage all of that. So excited that you're with us today. Um, if you can hear me, awesome. The main way that we're going to be communicating today is via chat. So if you are able to hear me, go ahead and pop something in the chat bin like we always do. Say good morning, say hello, let us know where you're from. You can say I was the first one on. Do I get an Asphalt Life hat? You can say whatever. Let us know that you're here and that you're there, and that you can hear us. Hey Mick, what's up? Stuart, hola, ¿cómo estás? Good morning, Alicia. Good morning, Bonnie, Dee, Ben. Yeah, you guys can hear me. Hey, Ryan. Good morning. Glad you guys are on. Lots more people are jumping into the queue, and I'm really excited because every month, I was just telling Jenny, every month Atlas spends time to actually invest back into our contractors to bring topics that are relevant to you and to your growing business and to be able to answer those hard to answer questions. And so what we do is we bring in our key partners, people like Jenny from Contractor Coach Pro, who can bring some value add to help you grow your business in a various amount of topics. And so just want to give you a teaser if you go to that next slide. Next month's webinar is really exciting. We're going to be joined by Ryan from Sumo Quote. He's going to be talking about 5 keys to improve your roofing quotes. So it's a March webinar. Right before spring season hits, and you need to be equipped on how your quote should look when you're giving it to a homeowner. I was talking with Ryan the other day, and one of the biggest things he said to me was, Tiara, most contractors don't realize it, but sometimes we overcrowd information back to the homeowner, and they can't digest all of that. Your quote is 5,000 pages long, or even 10 pages long. Sometimes it's too much. So how do you scale down the quote, give the homeowner what they need and not what they don't want, and really close more deals so that way when they're having that conversation back with the homeowner, they're bringing they have the stuff they need to talk to their spouse to be able to close that deal for you. So really important topic. If you have not heard from or been experienced Ryan from Sumo Quote, he is awesome. He's Canadian, so he may say a couple A's and things like that, but we love him and we can't wait for you to check him out. Also, awesome. Jenny, you're on it. So if you want to hit the next slide, we have a ton of events coming up. Obviously, today is our webinar here, but this is a screenshot of our events portal. And I want all of you guys to make sure that you are zoomed into all of the events that Atlas has to offer. Every month we are out there wanting to say hello to you, our valued contractor audience. So I'm going to put in the chat the link to our events page so that you can check it out. There's a lot of events coming up. We are coming to your area, and guess what? We want to see you. So here is the link to that. Go ahead and click on that link sometime during the webinar, after the webinar, and check us out. Make sure that you are aware of the events coming up for Atlas. All of our webinars are posted here. We'll see you guys at Win the Storm. Go ahead and put something in the chat if you are planning to attend Win the Storm next week, or this week rather, looking forward to seeing you guys there in Phoenix, I believe it is. Stan will be out there, and obviously we're really excited because we were nominated for 2 awards this year. One was Vendor of the Year. The second one was Vendor Rep of the Year. And so Stan will be at the awards with the Atlas team, and we can't wait to see you. So stop by. Say, hey, Tiara told me to tell you hi, what's up? We also gave out tickets this year for some of our valued contractors who participated in our survey. So lots of really good things happening. Atlas is where you want to focus some of your time and attention, and we got a lot going on. So we want to talk to you about all of it, want to see you at the different events, and definitely want to hear what's most important to you in these webinars. So Mick said, show me the money. So I guess that means we should get this webinar kicked off, Jenny.
All right.
So I'll start off by going through a quick agenda. Today we're going to be talking about your cash, right? How to know the difference between the why of cash-based versus accrual-based accounting. We'll talk a little bit about job costing. Jenny's going to jump into booking all of your costs, which is a big deal, right? If you're not allocating for each one of your costs, then you're going to find yourself in a conundrum come end of the year, right? Also, emotional framing. We'll talk a little bit about how not booking all of your costs actually frames how that frames your customer. And then employee cost profitability by trade. We'll look at budgeting, which is a big topic within obviously knowing how to manage your cash, how you budget, how you class things, how you track it as you scale, having different offices. As Jenny is going to show you some tips and tools in there and some control tools as well. So Jenny, let me give you a brief bio. So Jenny's from, is it Blaine,
Minnesota.
Blaine, Minnesota. She's a mom with 3 active boys. She has a CPA background, and she's been coaching for over 10 years within the construction industry. I know that you also worked directly with a roofing contractor and prior to going on, and now you're coaching independently with Contractor Coach Pro, which is awesome. Jenny loves problem solving, right? I've heard her speak before, and I absolutely loved her presentation, which is why we had her on today. And she does a really good job of answering questions. So I would just challenge you, if you're on this webinar, you have a specific question, get it ready. If we don't address it, then, or if you have a posting question that you want to ask during one of her presentation slides, put it in the chat. We'll be monitoring those throughout the webinar and cannot wait to answer those. So feel free to get engaged in this webinar. There's no question that's too stupid or whatnot. So jump in, and we're looking forward to hearing from you, Jenny.
Absolutely. Well, I am grateful to be here with you guys. We're going to actually start out with a polling question, and Tiara has them off on the right. You should be able to see within your panel under polls. Yep, it looks like she put that one out there. So I just want to start out with hearing, how is your company currently handling their accounting needs? Do you guys have in-house employees? I will touch on the outsourced firm. I don't mean a tax CPA. I assume most of you work with an outside tax firm, but maybe that firm also performs your bookkeeping needs. So that's what I'm kind of looking at here. Who handles your day-to-day accounting needs? Or do you use a combination, both in-house employees and some outsourced help elsewhere? And what we're going to talk about, I think, no matter which of these you use, I think it's extremely helpful that you have a background in these topics so you can ask the right questions, whether it's employees, your outsourced firm, or that combination. You can really gather, are you getting the numbers that you're wanting and that are valuable info to you?
Great. And if you haven't already responded to the poll, go ahead and pop your response in. It looks like 64% of you all have voted. Some of you guys have popped something in the chat, which is all good as well. So yeah, I'll share those results. It looks like about 42%, Jenny, are in-house employees, 22% outsource, and then 36% are a combination of both.
Great, kind of a mix all over the board. And like I said, I think no matter which you're at, this information should be helpful to you. So we will start with just talking about a little, what is cash-based accounting? Maybe you already know, maybe it's what you're using, but it really is like it sounds. It's letting the cash, where the cash is, meaning money coming in the door, out the door, drive your profitability of your company. So as you're receiving funds from your customer, regardless of where it's at in the project, that's received as income, and vice versa. When you pay out the expenses, when you pay it, it's received as an expense. So why I see a lot of companies using this is it's a simple method. It's probably the most simplistic. You're really just accounting for your bank account transactions. So it really is that simplified, and people feel like, okay, that's what we do. I also see that oftentimes people have cash basis for their taxes. That I don't disagree from necessarily. I really strongly encourage you to have that tax professional and make sure that they're analyzing that for you, looking at from a tax strategy, what's the better basis for you. And I see that completely different from a managerial side. So even when we talk about the benefits of accrual-based accounting, you can be on accrual-based accounting for your managerial side and really understanding your numbers, and your tax accountant can make a few quick adjusting journal entries and keep you on cash basis for tax advantages. So again, something I would strongly encourage you to reach out to your tax professional and make sure that they're keeping that in check, knowing which way you should be. Until you're over 25 million, you're not required to be accrual. Once you do hit that point, the IRS forces you to be accrual for tax purposes too. So going back to kind of this cash base, like we mentioned, it's really having your bank account drive your business decisions. And two of the big kind of negative perceptions I see out there, or just kind of false perceptions that happen when we're doing this accounting, is you may see your bank account really high. It's crept up. You have a lot of money in your bank account. You think you're doing awesome. You go buy that new vehicle, you take out a bunch of money for personal use, you think you're doing great. Really, in reality, a large part of that money could be your customer's money. So it's that liability to you. And without tracking that, you really don't know. You're letting that bank balance drive. And on the opposite side, you may be running out of money or have no money left, and we're freaking out thinking our company is failing. But if you knew the numbers there, it could be a lot of money is tied up in AR, and really profitability wise, you're doing just fine. So just two things to be cautious of when we're on this cash-based accounting.
Yeah, because a lot of people, like you said, feel like I have all this money in my account, show me the money. But if you're not actually doing an accrual, which it sounds like is your recommendation, so that you know kind of what's in, where you are on pace, what's coming out, and so forth.
Absolutely. And that's kind of going into this next part here of really making that mindset shift from managing your company based off of what's in my bank account, making decisions on spending based off of my bank account balance, to understanding your bottom line profit and let that drive some decision making. So before we jump into more of the accrual, I'm sure you're familiar with these two reports, but just kind of a refresher of a balance sheet is really just showing your financial position at any one point in time. So this becomes very important in accrual. It really shows what your company owes or owns, kind of those assets, liabilities, and then what's left as equity in your company. Where the profit and loss is that profitability at over a period of time. So it's the revenue and expenses over a set period of time. So understanding those two differences is important, because in this accrual based, it really steps back to timing recognition. The balance sheet becomes important because in this industry, you have two big factors is what I see. You have customer deposits, which is a huge, in my mind, liability. That's not money you've earned yet. It's money you've collected. And vice versa, if you're paying out costs on jobs, that's really an asset to you. You've paid money out on a job that you haven't started. So really understanding those, we'll talk more about those in a little bit here, but understanding your assets and liabilities is a very important piece of really feeling confident on your P&L, feeling confident that it's accurate, feeling confident that, yes, I can make decisions. We've made this much money. So a common shift that I see when you go to accrual is really treating the completion of your job as that timing. Once that job is complete is really when you should be recognizing that profit, not when you collect the money or when you pay out the money, but when it's complete. Now we've earned that profit.
Yeah. Mm-hmm.
So just to dive a little bit more into what I mean by that customer deposits and liability, we've found it helpful to compare these two, because like I said, you may be collecting money at different rates. Especially if you're an insurance contractor, you have all over the place. Those initial checks can be very large if it's a newer home, very small, depending on the storm industry. Those checks vary. So if you're recognizing profit off of collection, it's just all over the board. You can never really gauge when, or what's the accuracy of what we're booking. So that becomes off of your P&L. It goes onto your balance sheet, like we mentioned, until that job is complete. At the time it's complete, the whole job gets moved over to your P&L as profitability, and it kind of any additional funds you're waiting to collect turns over to AR at that point. So you're tracking that sort of asset to you too. It doesn't matter if you complete the job and you're still owed 10 grand. That profitability is still recognized by you. It's just now some cash is tied up in accounts receivable. So we like to compare these two before the job's complete, so you can have it flag you that, hey, we've spent a lot more. When I refer to WIP or work in progress, that's that asset I'm talking about of any costs that you've incurred on jobs that are not completed yet. So those kind of accrue along the way as you're doing the job. And so when we compare these two, it can kind of draw a red flag to you to say, hey, we've spent a whole lot more money on this job than what we've collected. Is there something we need to look into? Maybe it's just fine, you know about that. But again, just one of those controls that you can kind of monitor and just kind of keep yourself in tune to the job, as opposed to waiting till the end when maybe it's too late to catch something.
Yeah.
Yeah, at this point, I just want to do one more poll over here. I don't know if you can release the next poll, Tiara, but what are you guys currently using? Do you have a cash-based system, or are you using more of this accrual-based accounting in your company already?
Yeah, so if you are you currently using a cash-based or accrual system for accounting? So if you're using cash-based, then
is this a yes or no response I'm seeing?
It is.
Mm-hmm. To answer yes, maybe we clarify this. Can they change their answer? Should we say yes if you're using a cash base or an accrual? What do you have here?
So yeah, so if you're using cash base, say yes. If you're using accrual base, let's change it to say no. It looks like people are changing their answer, which is great.
Perfect. Yep. Well, and I know really predominantly right now, this takes up a majority of my coaching time, is switching people from this cash because they see the immense value in wanting to understand their numbers. And until you make that shift over to an accrual base, it's hard to have a grasp of your numbers. It goes off a lot. I'm sure your experience, if you are on cash, it's a lot of gut, like, oh, I have this gut, we're doing well, or my bank account says. So you're making those decisions without a lot of valuable data. So that's part of my coaching.
Like about 67%, Jenny, are using cash based on this poll.
Great, yeah. Yep, and like I said, making that shift, I'm hoping you're starting to see the value in that that kind of just mindset shift of what do we need to track. It's not as simple as cash method. I won't go that far, but it really gets down to some valuable. And we'll talk a few more items here. Has any questions come up on this? I know I went through a lot of information there, tried to stay a little bit more high level, but if you have any
what questions do you guys have about cash versus accrual based accounting? It looks like a lot of a couple of our contractors said that they clarified no, but to clarify, they do use accrual. So maybe that number was skewed a little bit, but it looks like about half and half are doing accrual and half are using cash based. What questions do you guys have about that? Go ahead and put them into the chat for us and we can keep going and circle back to them.
Perfect. I will jump on. Oops, sorry about that. Around here. We're going to move on to job costing, which again, through the accrual, this job costing becomes very crucial. Like TR mentioned at the beginning, it's really just making sure we're booking all of our costs. I say anything that's 100% attributable to a job, that it gets booked to the job. So we know what's all involved with that job. It allows a whole lot of controls we'll touch on. These costs I see are that labor, any labor on your jobs. You may have permits on jobs, any of the materials or supplies you need to perform that job. The commissions is a little bit more of a subjective topic here, and how I see this is if you are paying your sales reps a large amount of their compensation is base pay or salary, to me that falls more into a sales and marketing expense, kind of below the line, part of your overhead. We have those costs no matter what. I often see in this industry 100% commission. So when you are paying 100% commission, I view that as that's 100% attributable to a job. That is really assigned to that job, tracked to that job. We'll recognize the expense based off of when the job is completed, because we haven't incurred that until we complete the job. You may pay it out. That doesn't matter whether you pay it out partially up front, fully up front. That part doesn't matter. That's again more that cash basis when it's going out the door. But from a job costing, accrual-based idea, we have treated that most commonly as part of the job cost. The other piece here is that miscellaneous expense. The thing I wanted to touch on there is I often see companies having a hard time getting to the nitty. When you have these small charges, third-party measurements, for example, you're charged that smaller fee up front when you run the report. Maybe you have an EagleView hover, you're running that report, you're getting charged, but the job isn't even signed yet. So to track that cost to a job that's not even in your system yet, because it's not a signed deal, can be very cumbersome and detail-oriented. And so what we've switched to in a lot of cases is any of those kind of costs, I always suggest you just book them 100% to an expense account. And then when you go to close out the job, you can bill those costs to jobs. I refer to it as a $0 bill. It's really just using QuickBooks as a tool to assign the job cost. You pull it out of the expense account and then you book it to the job, which creates $0 transaction in there. It's just kind of moving the money around. To make sure you're getting it assigned to the job. Another piece where this is very common is customer transaction fees. Depending on what company, platform, whether you're financing or credit card fees, different companies charge you at different times. They may group it into a once a month fee. Obviously, if they're billing you every time you take a payment, they're billing you directly for that fee. You can book it to the job right there, but this is another tool through that. You don't want to miss out on that cost getting assigned to the job just because of the complexity of when you're charged. So just something to consider when I just strongly encourage as much as you can get booked to the job that is attributable to that job should be. So here's just one little tip, I guess, as how to account for some of those that may be a little tedious.
Yeah. We have a couple of thoughts on, accrual versus cash based, and then a question for you, Jenny.
Okay.
So Brent said, before we use accrual, I found the P&L to be essentially useless due to the late year adjusting entries. And accrual is much clearer for him in terms of identifying what he has in his P&L.
That's great. Yes, that's exactly what I'm referring to. It's just until you get there.
Yeah.
It's just a guessing game of when is the timing. Like you see the variability of collecting money on jobs. I'm sure you've experienced in this industry is all over the place. So yeah. It makes it very difficult to have any sort of understanding.
Ben says that they use a little bit of both methods, sometimes according to who they're providing the job for. Sometimes the cash works better when it comes to business loans. Accrual works best when we are making operations decisions. So he kind of splits his business down the end. I don't know if you have any recommendations or thoughts on that.
Well, I think I could see where you're talking about from getting a loan, I'm assuming, or, you know, presenting numbers to a bank to, you know, acquire loan funds or a line of credit, secure line of credit. So what I see there too, in kind of a fun space with this industry, is you have this big, broad, gray area spectrum, and you see numbers can change dramatically, and you really can make them be what you want in a lot of senses like that without being outside of what's valid. It's just whatever, however you look at it. So most banks will do their digging if they know their due diligence to say, what are we looking at here? What kind of basis? What kind of that? So they can normalize that. I would say you do have complete flexibility on, like I mentioned with the tax side, you may be cash basis for tax purposes, totally legit, fine. You're not over 25 million. I'm not arguing to you to switch away from that. If your tax CPA says, yep, this is beneficial to you, stick with that. I'm just saying your tax accountant can make some pretty easy adjustments where you can manage your books on accrual. So managerial wise, like we've heard from a couple others as well, they make sense to you. These numbers now have meaning, they make sense. Your tax accountant can make those simple adjustments and keep it on cash basis. So same with, I think I'm answering your question then along the loan. Maybe you are using, maybe it wasn't a question, just a comment about kind of toggling between the two for depending on what purposes you're going for. So yeah, I have nothing against that.
One question, you know, going back to job costing, Mick asks, you know, how do you determine, because there the job cost, and from an itemization perspective, for some things that are gray, right? There's vehicle payments, there's gas, insurance, you know. And in this scenario, when we're itemizing each job cost, how do you add that up? Is it divided by 12? I mean, how do you do that?
Yeah, so when you get into some like vehicle costs, I guess it depends on, you know, if you have a more specific question, if you have field labor employees, we're going to touch on that a little bit of how you can kind of incorporate that into the job cost. But if you're just talking about your production team needs to drive out to a job and it costs you money to pay for their vehicle, that's really an overhead expense. I don't see the need to associate that to a job. Now, if you want to, you know, I've done in the past where maybe you have we do this quality control, or we do this piece of the puzzle that happens on certain jobs or every job, and you want to put a dollar value to what that is. Maybe it's $100 fee. You're welcome to do that. I always just say, does it add value to you? If it adds value to you, sure. I would say it would add value if you're not doing it on every job. But if it's something you do on every single job, it's just part of your production service. That's just overhead.
Yeah. So if your sales guy has a truck that's branded and you're paying on it, that's an overhead fee. That's not necessarily bucketed into your itemized job costs.
Yes, exactly. So any of those that are attributable to you running your business, a marketing endeavor by, you know, plastering your trucks or with your logo, obviously that to me is managing your overhead expenses. Does not get it. So
which is a different line item altogether.
Yes, outside of this job costing altogether, for sure.
Yep. One other question, is it your opinion that charges associated with financing should be tied to the job? That's from Jan.
Yeah, so thanks for asking that. That's a great question. And I personally do. Again, I like to say anything that is 100% tied to a job, that financing fee is. So the profitability on jobs that you're constantly financing, you can start to track that, or, you know, at least spell out that, hey, the profitability on this was maybe this amount, but we're forgetting this 5% financing fee. That any of those costs, which I know you're going to touch on in the next slide, Tiara, just that emotional framework behind those customer transaction fees. But in my opinion, you want to track those. That's a cost to you that's solely because of that job. So yes, I would say my opinion is to book it to it.
Okay, a couple more questions for you, Jenny. What will one contractor, Ryan, is saying that he added insurance because he increased his roofing insurance, and his question was, what will the state be looking for in terms of the insurance cost now that he's upgraded to what he calls a big boy package? What should that, you know, should be accredited?
I may need a little more clarity there. I guess I'm thinking, are you asking about So like a GL policy that you have, does he touch on that? Like a GL policy that has a percentage?
Clarify that he's actually saying, in terms of an audit, from an auditing perspective, what will the
Okay,
state be looking for?
you're talking like your insurance audit, not a state IRS audit, I assume, right? That's what he was, we're going down, is that insurance audit. Correct, perfect. I saw that over there as well. So you're in insurance audits, we go through these all the time, and we use most common, I mean, that happens every year. That's not even like, oh, you got flagged for an IRS audit. These are audits. That's usually how they charge you for insurance, is what did you actually end your year producing. So I can't speak to all policies around the country. I know the most common I've seen, it's really just off of your gross revenue. So we just report to them in a consistent, you usually have to report to them in a consistent manner. So if we're going back to kind of cash versus accrual, as long as you're staying consistent year after year, you're reporting to them your gross revenues. So are you referring to, Ryan, maybe clarify if there's something on, does your policy require you to report profitability? And now you're questioning along those lines?
Yeah, Ryan, if you want to jump in there and put in some clarification, we can certainly circle back. We also have a couple other questions that are coming in the queue. I see them, and we're going to keep going, Jenny, but then I do have these questions that we'll circle back, because I think you may hit it in your budgeting section.
Perfect, perfect. So I will let you go on here to the next one.
Yeah, so next, one of the things that, I know that we talk about a lot, Jenny, which is on your previous slide, was really the emotional framework of the differences between building in costs in terms of the job and adding surcharges. Some states don't even allow surcharging. However, for the states that do, I just want to take a step back from there and say, from a marketing perspective, right? Purely marketing of how you approach or emotionally frame your homeowner when you add an additional cost for those job line items, that such as credit card fees or additional fees, will have to charge you an additional fee. After telling them that the price is $10,000, oh, I have to charge you 3% if you use a credit card. What we recommend is build in those fees into your bottom line and have them already built into your job costs, but then offer a cash discount to your homeowners. And what happens is, your homeowner, after you've already given them your bottom line of your costs, they trust that cost. And so what we don't want to do is, we don't want to say, well, there's an additional fee. It just feels emotionally like it's a pivot from what you initially told them that bottom line costing was going to be. And so here's the bottom line, guys. If you are not into financing, if you're not offering credit cards, if you're not partnering with companies like a Green Sky to offer third-party loans, that is an option that you should be looking into, because the data says most homeowners don't even have the deductible in cash in their savings account, or it'll clear out their savings. And so the important thing to do there is to actually partner with a third-party lender or company where you're offering them the option of plastic, and then build it into your costs, but then offer a cash-based discount. So just wanted to highlight that, because we think that is a really smart strategy to go forward with, especially when you're considering how that frames in the homeowner's mind.
Perfect. Thanks, Tiara. Yes. And so I know we touched on the expense side. This is more that, like she said, the marketing side of that job, but either way, it gets back to really wanting to know those costs that are associated with the financing too, so you can price accordingly and account for it accordingly. So one last topic on this job costing is really trying to understand. I assume most people use QuickBooks. If I'm off there, that's really what I recommend, is using a QuickBooks desktop platform. There may be a bigger discussion around that, but it allows for a lot of robust reporting along job costing that I know online is not quite to yet. But within QuickBooks, you have your accounts and your items. So a piece that I just wanted to touch on is really utilizing that item tracking for job costing. We have I always recommend you keep all overhead expenses on the expense tab within QuickBooks and 100% of your job expenses are always using on the items tab. Kind of makes it easier to train staff, train employees on the key difference, when to book, how to book. So on this items tab, this is just an example report, an example kind of structure. This isn't all inclusive of your items, but I strongly encourage items to be used for trades. So the reason, like you see in here, I know it's a little small and a little blurry here, but within the main trades, I always say you break up your materials and your labor. For us, and what I've seen common is it's a great control feature. So when you're reviewing your jobs, you can easily see things that, hey, this is out of line. We have way too much of materials versus labor, or vice versa. So that's a key piece of breaking those out here. But in the big scheme, you're breaking it out by trade. So at the end of the job and end of the year, you can really look by job and by company, how profitable are our trades. Again, this requires a lot of diligence on the accounting side, meaning these numbers are only as good as you're breaking it out. So on the revenue side, that's really breaking out your invoices or contract worksheets by trade correctly. So you know how much of what we're collecting is for which trade. So then it can be tied to the expense side of that trade, and you can get valuable data at the end to see, again, both each job that comes through. It's a great catch of errors. It's a great catch of what happened, monitoring jobs. But then again, also when you can compile all your jobs together and maybe want to make that decision of, is gutters profitable? Are we doing this here? Clearly here painting was maybe an excess add-on, but is painting profitable, or any, just to really understand the costs by trade can get you some really valuable insight.
Yeah.
Into that.
And I think it's important too, because a lot of you that are on this call, you do more than just install roofs. You may do gutters, and you want to be able to identify where your margins are on each one of your product. And so, margin is basically the cost, and the margin is the difference between the actual cost of goods of you doing the job, and then the margin is how much money you're actually making. That goes into your operation expenses and into your job costing to actually pay your bills, pay your salespeople, and all of that. So you want to be able to break down specifically, or hire somebody like a Jenny who can spend some hours in your books and say, hey, here's the top 3 areas where you're actually making money. This, I recommend we kind of, sunset maybe one of these areas of your business because it's not making you money. It's a cost to you. So this is golden. If you're not actually spending time in here, or if this doesn't make sense, get with Jenny after the webinar, shoot her an email so that you guys can spend some time talking through it. But this is awesome.
Great. Yes. Thanks, Tiara. So the next piece I wanted to touch on is employee costs. And I left it kind of vague here in the sense of maybe you're considering switching your sales reps from 1099 to a W-2 employee. Maybe you're considering bringing on some field labor, somebody, some people that are maybe doing some siding labor for you, or window install, or just more of those employees that you want to be doing labor on jobs.
Yeah.
Or we can stay as simple as maybe you're hiring another production manager or an admin personnel. In this, I just kind of wanted to walk through of things to consider of what is your true cost. So when you think of what you want to pay them, that's obviously what they're making. Obviously behind that number, there's costs involved. So I just wanted to walk through some things to consider. This is not necessarily an all-inclusive, but to give you some ideas of what to consider when you're trying to put a cost or a price tag on your budget for what is this going to cost us to make this change. So whether you are going to give them an hourly rate or a salary, we really just want to calculate what is their total wages that we're going to pay them. And then from there, we can go down this chart here to the payroll taxes. FICA is universal across the country. 7.65% is your employer portion of that tax that you are responsible for regardless. Unemployment is a little bit more subjective here. Every state's very different. Every company's very different. Most states, I think, really heavily weight your experience rating. So if you have no unemployment claims, you're going to be very low in this category. If you have a lot of claims or you're a brand new company, oftentimes your rate can be pegged pretty high. So that's a factor you would want to change to whatever your company is. Workers' comp, again, this is very dependent on the the type of role that you're hiring for. An admin personnel, for example, is going to be very small, usually less than 0.5%. But if you're trying to hire on a roofer, obviously you'll find with insurance companies, they're going to hike that up very high. So anywhere in the middle there, sales reps, you just want to talk to your insurance agent and figure out what is that workers' comp rate. It's usually a direct percentage of what you pay them. So that's obviously a cost to you.
Some of these, Jenny, you know, based on how the contractor's business is set up, they may need all of these line items, and then in some instances they may not need them. If they have, you know, some of these items, like for example, if they're just having a sales rep that's paid an hourly wage plus commission, some of these things may apply versus not.
Absolutely, and that's where we go down. That's really those first two, payroll taxes and workers' comp, pretty much hit everybody. I don't know anybody that can really get around those two. The rates change depending on, like we just talked about, but now going into these next items are just, you know, things to consider if you offer them. So when the question came up before about vehicle costs, this is a great place to add it in when you're trying to factor maybe an employee labor, what it really costs you to have them out on a job. You can plug in what's your annual vehicle cost, plug that dollar amount in here, and then we can assign it out to jobs. Maybe we'll get to that at the bottom of here, but the other item I wanted to mention, or the other two here, would be any benefits you offer your employees, incentives, health insurance, 401k, maybe short-term, long-term disability, life insurance. Any of those benefits have a cost to you. So obviously factoring those into the total employee cost is crucial if you have a robust benefits package. The other line item here is, I don't see this at all companies, but GL insurance, sometimes they charge you a percentage of the wages you pay out. So that's just something you want to consider, usually not very high, but just to throw out there, this gets us now, like Tiara said, not all of these will hit every employee, but when you figure out what is your true total employee cost, you obviously see it's different than what you're paying them. So if you are wanting to set that job costing labor burden, I always refer to it as like that labor rate that you want to charge jobs based off of how many hours they worked out there, this is what you would want to use. You'd want to use the total employee cost. You'd want to come up with what is the expected billable hours. So this may vary from that. I know it doesn't in this scenario here, but this may vary from how many hours you have to pay them, how many hours they work. Maybe they're doing a bunch of production work sometimes, but we only expect them to actually build jobs 1,500 hours a year, whatever that is that you are expecting to bill out on jobs. That's what you want to take their total costs and divide by. I always say round up, give yourself a little cushion room there, and that hourly rate. So in this scenario, it'd be $60 an hour every time they work on a job. You want your job costing team or your accounting team to be billing the job at that rate.
Gotcha.
Yeah, feel free to, I don't know if questions come in on this topic, but I'm happy to answer.
Yeah. Well, I think you kind of hit on, which was basically what is the value of knowing how much you pay per employee, right? Like, how do you massage that into, you know, how is that practically applied within, you know, a full-scale budgeting process? But I think you hit it on the head, which is once you know what each employee costs, you have some data that you can say, okay, this is how much I need to pay them. You know, this is how much they're costing me. This is how much, you know, you have some information that you can then go on and build your broader things.
Definitely. And I can speak to a couple other benefits of this. And like I said, this is not an in-depth, but where I've seen this be helpful is even if it's just presenting it to your employees. So maybe they feel like, oh, I'm only making this amount, but wait, I'm forgetting about this huge health insurance benefit or I have, or whatever the benefits package. So it's used however your company wants to use it. But that's one other way I've seen even just understanding this total comp picture has been helpful to even give your current employees a picture of what value you bring them. Because again, when you switch people from maybe they used to be a 1099, that value of 7.65% of FICA is straight value to them. When they were 1099, they were responsible for that portion. Now that they're employee, you as a company is responsible for that, but that's value to them. If they weren't an employee, they would be covering that. There was one other thought I had on, you know, so that's again from your current employees, but really the use of this tool is for those future employees. If you're trying to think about, well, I guess I mentioned two of those. If you're really trying to think about what can we afford, Or like we mentioned here, if you're wanting to try and bill it out, I see this as being very important so you don't forget about the additional costs. Maybe you're paying them $40 an hour and you think, oh, all we need to charge the job is $40 an hour. So this is just kind of make you aware that, hey, they actually cost you more than what you're paying them, and to that tool to get to more of an accurate place.
Great.
Perfect. Well, if there's no other questions on this, I'll move on, or we can circle back to them. Keep the questions coming and happy to answer. So the last topic we were going to touch on and just discuss is this budgeting. The class tracking piece is one of, maybe all of you are using it, maybe you're not. The best place I've seen for this class tracking to be used is if you have different offices, for sure. If you have different divisions within an office and you're wanting to really track them separately, it allows you to be able to keep your same accounting processes, your same chart of accounts, all those expense accounts, but you're able to assign it to each offices. So when I talk about accountability, whether you're running your own company and you're the only one looking at numbers, or as you grow and you want to start to delegate management level to different offices or different divisions, this allows you to really be able to hold them accountable to numbers. So when we talk about budgeting, we want to budget by class. So the people that are responsible, the parties that are responsible for that class or that office, that budget, they can be held accountable to that. So when we talk about controls, I strongly recommend reviewing those financials, the budgets versus actuals every month. It allows you to be lagged or look into a topic or an item or a line item that really needs to be watched, monitored. Maybe it's going way over budget really early in the year and a discussion needs to be had. So whether it's putting limits on yourself or, like we talked about, those managers who you're starting to delegate that spending power to, this really allows you to have that tool to be able to monitor it, limit yourself. Maybe you need that restraint to say, hey, I don't want to spend over this much in this account. And it just really gives you that system when you're using it. Again, if you set a budget and you never look at it the whole year, it's now pointless. But that's where I recommend, if it's not monthly, at least quarterly, but really just keeping that in front of mind so you can reference something to it, compare to it, catch things. Clearly can be fluid. Obviously, if a storm hits, I'm guessing a lot of things get ramped up. So on that too, of how we can keep that fluid. So a lot of times when setting a budget, I strongly recommend starting from a prior year budget standpoint or prior year spending. Maybe pull up your last year's spending, see what you spent, walk through, analyze, do we need to spend more? Maybe was that too much? Should we pare that down? Start with all those overhead expenses, like we mentioned, really set them to where you think they need to be at for what you plan to do for the next year. And then you can drill back into, okay, how many jobs do we need to sell? What do we need to be hitting margins at? You can kind of work backwards into some of that job numbers to say, can we sustain this? Because this is our overhead expense. That's fixed. We're going to have that no matter what. So we can gauge throughout the year. If we're not meeting some sales expectations, we're going to need to cut back on overhead expenses, or vice versa. We have, we're exceeding them. We have some room to increase our budgets. So,
right. And some people, I think, there's this nomenclature out there. There's this mindset that, when you have income coming in consistently, it's like, how do I end up with no money, right, at the end of the year? And I think specifically in our industry, we find a lot of contractors who frankly find themselves in, a bit of a pickle because they end up with no money. And so, people ask us, like, well, what is the benefit of, having these budgets and doing all this paperwork and having all these line items? Well, what it does is it tells you where your bounds are, and it helps you to identify where you need to cut back, where you need to spend that, and it helps you to be able to have those parameters kind of outlined on paper. Because when you don't and you're spending, then a lot of times, you find yourself thinking, oh yeah, I have this big credit line at distribution, right? I have all this money coming in here, and I have 5 jobs that are out that are confirmed in, but your money is already spent. So if your money's already spent, then, That's a problem. So that's where budgeting counts, you guys. If you are not keeping a budget, if you have not taken the step that Jenny's recommended of taking your money, taking all your spending and bucketing it into how you spent your money over the last year, and then just saying, okay, so do I want to keep this the same? Do I want to make a goal to go up or down? Just even very basic. Jenny, I know you have some suggestions on, keeping a monthly review and things like that of your budget just to see if you're on track.
Exactly. You nail it on the head with so many of the benefits, and why I think companies get to that point is your overhead expenses are fantastic if you meet your sales goals. Maybe in your budget, you're fine there, but your overhead expenses could take you totally in the opposite direction if sales aren't going up, because they're there. They're there no matter what. You're spending that money until you make necessary changes. So tracking this, like she said, is what I just see as being able to help you catch that before it's too late. And now you're to the end of the year and we have no money left and we're too far deep.
Right. So a couple of questions in terms of operating expenses, right? So that is a baseline for how much a business needs to make in a year in order to operate their business. So and from a basic budgeting perspective, can you kind of walk us through, we got some questions around this, which is why I'm asking you. So walk us through, how operating expenses and job costs, how does all of that kind of bucket up to?
That's a great question. I think it would be far too detailed to get into the nitty gritty of, what percentages fall under which accounts. I mean, that's a whole nother discussion topic here, but in general, it really is looking at, okay, so maybe you have, and I don't have a great layout of a full chart of accounts here, but obviously everyone has production. You have a cost behind production. You need to monitor that. Contractor Coach Pro has a great tool for really diving into how much what can we afford in each of these categories based off of where our sales are at. We love to coach around that and really dive into it. It's very company specific, depending on maybe you have marketing endeavors that are really ramping up because you're growing or scaling back. Obviously, what you're spending on marketing is going to affect the other areas. You have one bottom line number. And so like you're talking about, how it all feeds in is you start with your gross profit at the top, that margin like we were talking about earlier. As long as you're tracking those job costs, well, then you get down to your operating overhead expenses and you have all those buckets. Like I said, I don't to go into I don't know if there's a specific question we can touch on, but you really have your expenses now that to get to your bottom line goal of what you want to take home, it has to go somewhere, and it can only go somewhere, or it's going to dip into that bottom line percentage.
Right. That makes sense. So once you get you kind of add up all of your line items at the end of the day, you know where you need to meet based on how many jobs you want to hit this year, and you have benchmarks to basically going into the rest of the year.
Absolutely. Absolutely.
A couple of questions have been coming in around QuickBooks as well, but I'm sorry, I cut you off. Were you going to say something else?
Yep, I was just going to finish on with kind of the tips of the budget, but we can cut to those questions, or do you want me to wrap this part up?
Yeah, go ahead and wrap that up, and then we'll spend the last 5 minutes on questions. So if you have any questions, go ahead and put them in.
Wonderful. So the last piece I just wanted to touch on with budgeting was, where do you track it? Maybe this touches a little bit on your QuickBooks questions posted. QuickBooks has an immense amount of capabilities. We've found it beneficial to kind of use Google Sheets in many ways, especially with financials, so you can give certain people access to certain data that's valuable to them. So when we talk about class tracking or accountability, they're only seeing the part they're responsible for. So we do a lot of our actual budgeting through Google Sheets. I'll recommend in many situations, especially if you're wanting to keep it fluid and change it if a storm ramps up. This is your easiest route, because Google Sheets can be shared with whoever needs to. They can make their adjustments accordingly. QuickBooks does allow you to put your budgets right in there. It definitely makes it easier to review them because they're right in there on a budget to actual report. So it's definitely an option to do as well. I just kind of put in the plug of where it is under company planning and budgeting, and that's where you can set up your budgets and put them by class. It is really a robust feature in there too. So yeah, we can dive back into those questions that came up.
Yeah. So a couple questions on QuickBooks. Ryan, if you have anything specifically you want to ask about QuickBooks, go ahead and put it in the chat, and we can I can ask Jenny about that. QuickBooks Online versus QuickBooks Desktop. Jenny, can you give
Yes.
us the pros and cons of both, and what you recommend?
Yeah. So Intuit is the owner of QuickBooks. They are investing a lot into QuickBooks Online, time, energy, resources. I know that division is growing. Where they're at now, even the rep I spoke to most recently, he personally still recommends QuickBooks Desktop. That have yet to see QuickBooks Online do the functionality that desktop can do for contractors. Again, other industries, online is perfect, perfectly fine. Just kind of these robust job costing features. I do feel like online is lagging on. They seem self-admittedly to that. So Enterprise is a version, I know Enterprise is the QuickBooks desktop version. I know they are still investing into that platform. It really is. If you plan to grow to be a big company, I will be shocked that online will really be able to I won't say that forever. Technology is always changing, but that online would be able to really get you what you need if you're going to become, and wanting to continue to grow. So that enterprise version, I've yet to be capped out on, you know. So
So sticking with desktop, sticking with the desktop sounds like.
yes, yes,
Okay.
that is my opinion.
Okay, and then QuickBooks versions. There's Ryan has version 2017. There's other versions. They seem to come out with a new version often. So, how often do we need to update, and best use cases for QuickBooks for a contractor that is trying to do it in-house?
Perfect. So yes, annually they come out with new versions. They don't update much each year. It's not like you have this dramatic change each year. So depending on what platform you use, no, you don't need to purchase. A lot of times they get you on more of an annual subscription based. So they give you the updates every year. I will make a plug. I know a huge piece with QuickBooks Online. People love that you could access it anywhere. It's QuickBooks Online. It's in the cloud. So Right Networks is a provider of cloud-based for desktop. You can log into their server, they host it. You don't need to host QuickBooks
What is
on
the
your.
name of it, Jenny? I'll put it in the chat.
Perfect. Right Networks, it's the only, if you call QuickBooks, you would call QuickBooks to order it. They're going to connect you with Right Networks. They've now more joined, so you don't need to have two processes setting up. But that's the company that they're 100% affiliated with to do that feature. So you can log in from anywhere and access your desktop version. You can still have multiple users, all of that. You can still have through desktop. It's a little different than online, obviously, but so again, I guess to speak back to that version, it really just depends on what piece you have. No, if you have like a premier version of QuickBooks, I don't highly recommend you go out and upgrade right away. I don't see anything drastically new each year, but you may want to consider the annual subscription. They keep, at the point you hear that QuickBooks is not servicing your version anymore, that's probably the time. It usually comes after maybe 4 years or so, 3 years. I forget what that's at, but that may be the time that you want to upgrade. So if you have issues, they'll still answer your questions and service it.
Right. I think a lot of people on here are saying, yeah, you walk away to our contractors from this call and they're like, wow, there's a lot of things I didn't know or don't have time to do, right? And that's where I would highly encourage you to reach out to Jenny. Jenny, if you'll promote that site, yep. Jenny's information is right here, and obviously she loves answering questions and getting insight, but Jenny spends a lot of her time coaching contractors on how to get these core features and benefits up and running. And so my suggestion to you, if you're walking away from this call like, yes, I got about 5 things that I definitely need to do. I do want to look at going from cash-based to accrual-based, and I want to figure out how to take those next steps. Reach out to Jenny, shoot her an email so that you can get those questions answered. And if you have anything specific around QuickBooks, I know that she'll be more than happy to help steer or guide you in the right direction. Another question that came in was around third-party financing and credit card merchant processing systems. Atlas has actually invested in a resource, because we know that as a roofing manufacturer that we don't have all the answers. So Wade Davis is on the Atlas team as a finance consultant for contractors. He spends all of his time coaching, like Jenny does on the budgeting and financing side. He actually spends time coaching on the other side, which is which third party vendors are best for you. Should you be using Green Sky, or should you using Foundation Finance, or should you be using a different lender third party service? And also, credit card merchant processing systems. So I will put Wade's information in the chat. There you go. It's in there. Wade Davis, he's a great resource. He's done a couple webinars with Atlas, but he is full-time on staff, and his whole goal is to coach contractors for third-party finance solutions. So be sure to reach out to him, reach out to Jenny. And Jenny, thank you so much. This has been awesome.
Yeah, well, thank you for having me. This was wonderful.
All right, guys.
Well, yes, like she said, my info is here and I am happy to help. I'm happy to answer questions. I'm happy to talk more about our coaching platforms and what we can do to help you guys.
Sorry.
Oh.
A little coughing fit. But thanks everybody for joining, and we will see you soon.
Sounds great. Thanks, Tiara. Thanks, guys.